I help professionals and small business owners design a financial blueprint that help reduce debt, increase savings, and increase their investments for their long-term financial goals and retirement plans. And I help you do this through my roadmap to financial freedom methods over the long term. Definitely a blessing to be here one more time. And thank you all for that. Have been following me, looking at my videos. Hopefully, I've had an impact on someone and made a difference. And also, if you have any questions, definitely feel free to reach out, ask your questions. I definitely would love to address some of those questions that are out there. Today, I'm going to be talking about how to invest in the stock market, especially for some of you beginners. You always thought about investing in the stock market, wanted to know how to get started. What does it take? I'm going to be talking about that on this evening about how to get invested in stocks. This is one of the ways, and actually how you can grow wealth over long periods of time. I know a lot of you have seen some of those movies. They trade in stocks. The likes of blingy. It's look like a lot of confusion up there on New York Wall Street, and you see a lot of people. It look like they don't know what they're doing, but there's some actually order in that confusion. And also with technology, it is also available for you. Yeah, that's you. You can actually invest or trade, like you see how people are doing on Wall Street. You can do it from the comfort of your home. You can actually do it on your phone as well. There's so many convenient ways to do it. And one of the ways I would like to talk about is using a online brokerage firm. That is something that I actually started with when I first started with stocks trading. I used the online brokerage firm, which is good for I think for beginners. Is a do-it-yourself brokerage firm. As I told you all in the past, I used to be a full service broker as a financial advisor. And so what they actually did, you would actually pay me the money, bring your money to me, and leave it over. Then I would actually decide um, how to invest your money, whether we need to go. And I actually would see what your tolerance, your risk tolerance is. And so I would invest the money on your behalf for that. Now with a discount broker, it's cheaper. It doesn't cost as much as a full service, and you are now doing the investing. Now you are actually choosing the stocks that you want to invest in. Man, how times have changed over the years. But this is actually a great opportunity if you do have a full service broker to actually put a small amount of money into your discount brokerage or online brokerage account and actually kind of learn what is going on without actually um, risking a huge amount of money. You want to learn first. Some people even paper trade before once they actually open up an online brokerage firm. So that's another thing you can do, paper trade until you actually start learning the market as well. So I'm going to be talking about some steps you can do to actually start trading uh, and getting invested in the stock market. One of the best ways, and some of you have already done this, is actually investing in your employer's 401k or 403b or whatever employer sponsored retirement program that's out there. You want to start there. That's an easy way to actually look at how you're doing. They usually send out quarterly statements to show how your choices you made. Majority of the time, they use mutual funds to actually invest in. So take a look at that. That's a great way to actually get initially started. But if you want to do something outside of your retirement, this is when you want to look at some of your online brokerage firms, such as TD Ameritrade. You have E Trade out there. You have Robinhood. You have Webull, Interactive Brokerage, uh, Charles Schwab, just to name a few. There's so many out there. You actually can do some research and see which one is the most available for you and what can work for you as well. So take a look at that. And what I actually do as a financial coach, I actually help my clients actually find the right type of company to work with actually walk you through the process of actually opening up that account, actually showing you how to actually read some of the statements, look at some of the information, decipher that, and then eventually learn how to place a trade, even using the two basic things we want to start off using a limit order or a market order. So those are two things you would like to look at. So that definitely will help you get started with that. You want to actually, if you don't feel comfortable, use a professional to help you get started. Another, once you get started, you want to look at where do I want to go. Do I want to look at individual stocks? Do I want to look at mutual funds? Do I want to look at exchange traded funds, also known as ETFs? So those are different things. I recommend getting started. Most people start with mutual funds. That's a basket of stocks together, and they're actually managed by a fund manager, and they're managing that on your behalf. So you just actually choose the fund family that you want to invest in, and that is a way you can actually start. Now, if you want to get like a specific company, individuals such as Apple, Microsoft, GM, P&G, Walmart, and then you can do that as well. It would be based on the price of that particular share. So if a stock is $10 per share, you say I want to own a small part of it. I want to put about $100. Then you would get 10 shares at $10, like that. So it would actually depend on the price of the share or how many shares you would get. So that's just one thing you would like to keep in mind if you want to participate in getting more shares of a particular company. That's when budgeting your money, saving for the long term comes into play. The more you want to invest for bigger stocks, it's going to cost more. But here's a simple way you can actually get started as well. And this is what I did. I got started with a mutual fund. A mutual fund, I was actually started off with as little as $50 a month. That's what I started off with. So you actually can start off, and that's kind of like dollar cost averaging as well over the long period of time. So when stocks go up, your investment goes up. But when the stock market goes down, you buy more shares as well. So $50 a month. If you don't have that much money, I mean, you can start with that. Make sure you find a good mutual fund. You want to do the right type of um, due diligence as far as doing the right type of research. Make sure that that mutual fund meets your goals that you're looking to do. Because you all want to try to buy the right investment, and that's easier said than done. But it takes a little due diligence to actually find the right investment, and with some time, with some effort, if you need it, so help a professional, the help a professional, then you can actually find something that's suitable for you that meet your risk tolerance in doing that. And then, of course, you don't want to have to spend a lot of money if you don't have the right amount of money. So that's another good thing. And some people say, you might want to avoid individual stocks at the beginning. If you do get individual stocks, you just don't want to pay that much money into it when starting off. I say a couple of $100 at the most. Something that if you invest in, not going to break your kitty. I want to say roll over your IRA and then put it all into one stock. Now that's high risk. You don't want to do that, but you want to take your time, learn, and grow. That's the thing. What it's all about. You gaining knowledge, you growing, you feeling comfortable, you taking charge of your future. That's what it's all about. Sometimes we get tired of people telling us how to do things, but this is your opportunity to learn and focus on investing for you. And usually, investing over the long term gets the best results over the long. I've seen it for myself. Short term investing, such as day trading. Some people like to do swing trades. Sometimes you may do well every now and then, but those are very high risk trading. So look at focusing on investing for the long term because some of the markets are going to go up, they're going to go down. It's like a roller coaster. But over the time, over years, Research has shown and historical data that the stock market is one of the best investment vehicles to be in for the long term. It's always averaged itself out. I mean, when it went down, it's actually a good time for, I say, it's on sale for you to buy additional stock as it goes back up, as we've seen it during the pandemic. Market hit a big crash, went down at least 40%. But guess what? It came back up and made all-time highs after doing that. So a lot of people that invested during that time and sold, they actually lost some money. So you have to be able to withstand the market. You don't want to be looking at it every day. Um, that's not good because they're going to play on your emotions. A lot of time, looking at playing the stock market is definitely psychological and not for the weak at heart. Sometimes, if you're looking at it every day, that's when you may want to do something more conservative that doesn't have much up and down, much volatility. That will work for you. And one way you can do that is creating a diversified portfolio. So you don't want all of your stocks from one industry. You don't want all of your investments from tech. You don't want all your stocks from oil companies or consumer products. You want to try to diversify that your portfolio because when one is going up, the other one may be going down, and you want to be able to average it out over the long term. So make sure that you have a well diversified portfolio that's going to take you over the long term. And so just be prepared for some downturns, like in during the COVID period. That's happened. That's part of the process. And then if you want to get some practice, there are some stock market stimulators out there. There's some paper trading you can do before you even invest your own money. You might say, well, let me just practice for a little while, and that's all right. Practice, see what you can do on your own, or and see how you really feel. Just get a feel of the market, see how much you want to invest, how far you want to go with that, and it definitely will work itself out for you. I don't think that's a good thing. But one of the most important thing is staying committed for the long term for your portfolio. Make sure you are committed over the long term. And I think you would be all right. So you said, when should I get started? I think right now is the good time to get started. The market has rebounded in 2023. Some have reached some 52 all-time highs. Hey, the market, I said something to jump in and get in the right and get in the mix. And I think right now could be an opportune time for you. So hopefully you got some tips of how to get in the market. If you need my help as a professional coach to coach you through those scenarios, through different situations, how to actually set up a online brokerage account, how to navigate, how to actually um, look at something, what the language really means. When do I need to put money in? How much to kind of look at? You need some hand holding. Definitely feel free to reach out to me. My website should be on there. Take a look at that, or you could DM me as well. I definitely will look forward to hearing from you. And don't forget to put your questions in there. We'd definitely love to answer those questions and help you improve in your financial goals. This is Milton Johnson, and I look forward to talking to you in the near future.